So the Forex market is traded as an over-the-counter market, over-the-counter, which is often shortened to OTC. Now what that means is that it's not traded on exchange. So stocks are commonly traded on an exchange. It means that it is highly regulated. It means that you have to go to the exchange or go to a broker with a connection to exchange to get the stock. It means that it's only open at certain hours of the day. Liquidity may be different, and also you have to pay a commission on every trade that you make. Whereas in FX, you don't have to pay a commission because there's no exchange there. You're just paying the spread, as you mentioned before. And FX is more of a sort of a freer market because it is available internationally all over the world in many, many different places. And I believe that because it's an OTC product, that's why it is, such a largely available. You don't have these restrictions that you have with the exchange. But it's still a regulated market. Anyone that offers the ability to trade in the currency market, it does depend on regions, but in any developed region, that broker or that bank has to be regulated by the local authority. So there is still eyes watching. I think the most important thing for the individual is that they need to know that their funds are safe. So when they deposit into a broker, they need to know that those funds are not going to be transferred somewhere else in the world. They need to know that their funds are separated from anyone else's, that they're protected. And this is what regulators offer. Other important things as well, for maybe the regulators don't get too involved in this, but just from a trading point of view, a trader needs to experience good execution. So they need to be able to, if they've seen a price in the market and that price is tradable at that time, then the broker should allow them to execute without latency. But actually in today's, when I started 8 years ago, maybe things were a bit slower, there were some problems, but actually a lot of brokers today have really focused on the technology they use and getting the right liquidity for their clients. So actually execution is pretty good these days.